Hello, my name is Wim Lievens, and in this video I will show you my SuperFive tool on the TradingView platform. As always, I will explain where this tool is coming from, why I developed it, how I use it, how it can benefit you. I'll give you a few insights on my trading philosophy, and of course I will show you the tool on TradingView as well. As always, custom to these presentations, we have to begin with the disclaimer. And well, we take this very serious here because, as you know, we trade CFDs, forex, futures, or other instruments on leverage, on margin, and that means that you can actually trade for amounts which are actually higher than the size of your account. And this, of course, is on the one side is wonderful, but on the other side there are certain risks which you have to know about, which you have to learn, and therefore if you have any questions regarding risks, risk management, the tools, instruments, do not hesitate to contact me via the website, my trade class here. It's in 4 languages now. Just, pop me a small mail and I will explain to you everything you need to know about these risks. Okay? So furthermore, I can say to you that we provide training only, that I am not affiliated with any broker or trading platform, which means that I am neutral. The tool, the SuperFive tool, is very, very popular in Europe, and now finally also available on TradingView. So we'll leave it at that, and let's begin. Why use, or what could this tool, this SuperFive trading tool, what could it bring? And well, the reason I've developed it is because the way I trade, and you will see this further in the video, is based on price movement only. And this tool has been developed exactly the same way. There are 5 strategies incorporated. You have 9 algorithms you can use, but you say you have 5 categories, 5 strategies. You can use this on any time frame, any instrument, also on range bars if you would like. I use them personally on range bars, but I have many people using this on hourly charts or even daily charts for the alert function. So auto trading is also possible, but then you have to go to an external party. Alarms, the alert function works wonderfully well. I must say that from the, well, if I compare the 6 platforms I have now, I must say that the alarm function on TradingView works very well, very practical. I've been running it now for a few months, and it is, well, I can say I'm very happy with it. The main reason people use this tool is to avoid overtrading, or to trade only when markets are favorable, or when market conditions are favorable, and to avoid this, this fear of missing out thing, and wanting to enter in positions all the time. And so I have many students who are facing that issue, and the reason we developed this tool over the last years was mainly due to that, and I must say with a great deal of success. Now, you see the images, how the tool looks. We'll talk about that later. Just a few words about, the way I trade. I started in '98 in the States. First traded stocks, swing trading, and after that became a day trader, professional day trader, you could say, starting from 2002. So been doing this for a few years. only started sharing my ideas and my trading philosophy, I would say 5 to 7 years ago, because people saw that I was trading and asked me to talk about my trading and trade live. I've traded live in many events in Germany, in France, in Amsterdam, all over Europe, where in real time I'm just shown what I'm doing. And so what I prefer to do is, of course, do the live trading and in these events. I think it's always wonderful to see people who get excited when they see things in real time. But I also talk about why I trade price volume only, what market structure is trying to explain to people how markets really work. Also prefer to trade on movement bars, range bars, or also develop my own bar. How you can combine different time frames, or can combine time frames with range bars. So money management, of course, and the strategies. And I tried to bring this all together as much as I could into this trading tool, which has now been available for the last 2 or 3 years, had many requests on different platforms. And so finally the day is there, and it is also working now on TradingView. Now, few words about, I like my trading philosophy and how I trade. I like to keep things simple, structured, very disciplined, but simple. And with simple, I don't mean to say that trading is simple, because it's difficult. But what is important is that you have a very clear set of rules, and there are not too many gray areas, and that you can recognize on a chart when the conditions are favorable and when they are not favorable, and to only trade when they are favorable. And that is almost a black and white thing. And then, of course, you have the specific strategies you can apply, and then very precise money management systems. There are several, but is putting all these things together, which you actually should be able to write down on a half piece of paper, and just, write down in your diary what the results are, and then see what the numbers are. And then after, I don't know, 8 weeks or 3 months, say, hey, these are my statistics. I always share the statistics, the results with my students. I know exactly what they should be, depending on the strategy and the money management you use. So it becomes very concrete. So simple, yes, so everybody can understand, and that you're sitting in front of a screen and you know exactly what you have to do, and also that you know what, under normal circumstances, let's say on 100 trades or 300 trades, you know what this will bring to the table. That is very important. So I'm making it very concrete. Yeah, no, general or vague ideas. I don't like that. I am from the north of Belgium. I live 30 kilometers from Brussels, and I like things to be very clear and precise. Now, chart analysis strategies are important, but I think money management is even more important. And once you know these two elements, you know exactly what you're doing, then of course the emotional part, the discipline part is also very important. But it becomes a lot, easier, straightforward, because if you're always doing the same thing, you know exactly what you have to do, and you know exactly what it's going to bring. That will help you mentally. It will help you build mental capital. Belgium is a country where we cycle a lot, and if you want to ride a bicycle, there's only one way, and that is get on the bike and ride or pedal. And so same with trading. Practice makes perfect. The only way to learn this is by doing. So this tool also was developed from that perspective. It's a practical tool. It's not a robot. It's a practical trading tool. And yes, it will take you a few months to really discover the full potential of it. It's not something that you're going to switch on and say, oh, well, no, it's not like that, because there's several layers in this product. There's a huge amount of things you can do with it, and therefore you have to practice a lot. Good. Now, basically the tool is also based on one of the online courses that I developed 3 years ago. So also many people in Europe follow this course. And well, people like the structure and the clarity of the ideas. And so basically what I did 2-3 years ago is to try to get as much as I could of these ideas, of this concept, of this philosophy into the tool. Just giving you the idea here. You will of course get the sheets when you buy or purchase this tool. You of course get the price movement here, presentation, and then if you have any questions regarding the course, which is now also available in English, you can of course contact me over my website. Okay, so you have an idea. It's about 12-13 hours of videos with some coaching involved and some private sessions where either we discuss some trades or we even trade together. This is normally what I still do, 3-4 hours a day. I just trade with students so they can in real time see how this actually works. And I think that's important to at least show in real time how these things work. Good. Now let's begin with the analysis. And actually what you see here is a real analysis. It's an analysis which was sent to me a few years ago, and of course we can laugh with this, but of course this is a big problem, because at the end of the day there is so much stuff out there that people are having a hard time to say, how do I begin now? What do I use? What is important? What is good? What is not good? I mean, at the end of the day, we're lost. And what I'm trying to get across is that we should be able to recognize good market conditions on a chart, but on a chart where there is nothing on the chart. Of course, I'll get to that later. I'll also put a few things on there, but there is a lot of information on the chart, on the price movement. Even if that price movement is linked to volume, there is a huge amount of information on there. Now, you can always use some indicators which you like because you're used to looking at the market the way it is, and it clarifies the image, or you can visually easier recognize certain thing, or maybe if you're a trader of divergences and you can recognize them with some indicator you're using, why not? But this should be 20%. The analysis based on price and volume should be 80%. And it's a simple ABC. It's really trying to look at price movements in a structured ways to recognize directly, am I here in a trend or in a sideways market? What phase of the market am I in? What are these phases? Most people know this, but we don't always use it. What are the key price levels? What are the important levels? What do I use and what do I not use? I'll answer that later on in the video. What are the fair values? What is the control and rejection prices? Why are they important? And so on. So it is a pretty, I would say, clear, straightforward checklist, which you go through. Once you're used doing it, it will take you seconds, maybe 10 seconds, maybe 30 seconds, and you'll say, hey, this is where I am. This could be a good idea, or at this time I don't want to touch it. It doesn't look good at all. Now, it's not black and white, I know, but there is a huge amount of things you can recognize. And basically, it's just, the first question is not which signal should I enter or which indicator should I use. No, the first question should be, is there an opportunity for me now, or for us, or for yourself, to trade now, yes or no? And in which direction? Yeah, it's very rare that I see opportunities in both directions at the same time. It can change in 5 minutes. Yes, it can be long, and then 5 minutes from now it could be short because the market has changed dramatically in those 5 minutes. That is possible, but at the same time it's very rare. So we recognize, hey, is there now an imbalance? Is there an opportunity now? Should I wait for a signal in this or the other direction, or should I just sit on my hands and not do anything? So that is the first question. Okay, I will show you later in the video, and this is also something that we'll discuss in the coaching sessions, how I do this. And it's really, it's something that has served me well for the last few years. I also have to say that a part of this analysis is already built in to the tool, and will therefore, the tool will help you to stay out a lot of trouble, a lot of poor circumstances a lot of the time. Okay, but there's also the human factor, of course, but yes, it will help you a lot. Now, the analysis, just giving you a few ideas. We use trend channels, we use control prices, we use the fair value areas, we use excess prices. These are things we look at. Yeah, you can also do this very simple and straightforward and say, okay, I want to look at market cycles first, and everybody knows this: uptrends, downtrends, the accumulation phase or distribution phase. There's a lot of stuff out there, but never forget to look at this, okay? And ask yourself, when you are trading also with this tool, what phase of the market or what cycle am I in now? And in which direction would I be interested to use certain signals? So there's always that. Now again, to a large extent, I already put it in. Now, you see this, very simple. These are trends, and this is something that we love. Beginning trends, higher highs, higher lows, or vice versa. Here again, higher highs, higher lows, and vice versa. This excellent market conditions, they could develop into a bigger trend with huge potential. Not always, of course, but this is the type of market where most traders will make money. The problem is that the market isn't always like this. It's 35% of the time it's like this, but 65% of the time it's like this, which is sideways. Now the problem with this is that when you look at it like this on my screen, or in some book where people talk about ranges, that's nice because you can recognize them when it's too late, because the range, when you see it, you probably already lost 3 or 4 times. So there is no point for me to seeing this like this. I have to be able to recognize these ranges a lot sooner, a lot quicker. Now I use the 20 exponential moving average for that. It's a very simple tool, but the reason I'm saying this now is because we will use this in the tool. So we will incorporate this principle in the tool in different dimensions. I'll explain that later. So we can avoid these phases, I would say, in quite a high, very high percentage. Of course, it's not perfect, but we will be able to stay out of a lot of trouble because of the tool. So I'll come to that later. Now, this we all know. We know that we very often we get into these situations. I'm not gonna dwell on this, but I want to move to the strategies directly. Now, you see how the tool looks. I'll talk about the anatomy of the tool, what you see on the screen. You'll see it's visually very, I would say, well, it's good to look at, but very clear to look at. You will be able to recognize certain phases and recognize signals even without the alerts. But what I want to explain now is that basically, coming back to earlier, what can a price do? It can trend, it can be in a range, it can test support and resistances, or it can break out. Yeah, sometimes you see a Dutch word in here, and I apologize for that. It's always difficult to translate these things in all these languages, and sometimes a word gets dropped. So when you see a number 4, there is of course the breakouts. Now this is what can happen. Now it's very important to understand this, because coming back to the strategies, you will explain, you will see why. Now there's another thing, is that this tool, the SuperFive tool, can be used on all type of charts. So if you're a trader on 3 minutes, or you trade forex on an hour, or you are a swing trader, or you are a scalper and you like to trade on very small range bars, for example, you can all use these. You can just put on the tool and it works on all different types of candles. But I would like to share an idea with you, because I see, well, many people already trade like that, but if you don't, I would like to explain that trading with movement bars or range bars, which are available in TradingView, is for day trading. I would say for shorter trading positions, I would say going from 5 seconds to 50 minutes, to give you an idea. Trading with range bars is a very good idea, in my opinion. It has a few advantages, especially for strong moves, even on 1, 2, 3, 5 minute charts. What you will see is when the market really moves, you have these huge candles, and this with range bars, where every bar has the same size, that will be a lot easier to trade. Now also, when there is no movement in the market, since range bars are only built by movement, and if there is no movement, there will be very few bars. So you will only see the relevant bars or the relevant candles when there's movement. With time, that unfortunately is not the case, because many bars on time bars, 5 minutes, 30 minutes, 60 minutes, are irrelevant. Why? Because nothing's happening. Now some are important, but many aren't. What you will have with range bars or movement candles is that more bars will be important, and you will only see what is relevant, which is movement. Okay, now therefore, because all these bars also have the same size, the entry points are more precise. You will have more opportunities also to enter. I'll explain that later. And of course, since the size of every bar is the same, in terms of money management, you can manage your positions more precise also. So the risk reward very often is better, because if you have huge candles on 1 minute or 2 minutes, 3 minutes, even you never know really, when you put your stop under a certain bar, how much money will this be. Now this will, in range bars, this will be different, because it will look like this, these triads. And if you know the size of one of these bars, the triad will normally be a stop, which is, I would say, taking into consideration the slippage and the spread, 2.5 times the size of the candle. So if you have a candle which is 10 pips in forex, you know that your stop will be more or less under this triad will be 25. If you're trading the ES, well, and you say, all right, I want to trade fast, 4 ticks. Okay, 4 ticks. You know that the triads will give you 4 ticks multiplied by 2.5 will be 10 ticks. Okay, so this is, you will be very, I mean, it's a lot in terms of money management. I think it's a huge advantage. So especially when you're a trader in short period of times and you like to trade fast, or you would like to learn how to trade fast, I would definitely look at movement candles, right? And also you will see that these triads which you see are a very important part on the tool, because they also will be used to trigger certain signals. Now, if you use the normal market structure highs, market structure lows on time bars, that will also work. But then you have to take into consideration that sometimes you will have small bars and other times you will have, well, large bars or big bars. Okay, good. Now, money management is something that I will not discuss here. I just put it in my presentations because it's like a small bonus. The only thing I would say, what I see sometimes is that people are trading above the pain threshold. I would strongly advise against that. Trade in your comfort zone in the beginning, and once things are going smoothly, are going well, then slowly, build the position up. For the rest, I'm not going to talk about money management in this presentation. I have presentations also in my trading courses. There is a very, very important part on different trading and money management systems, but that is not the purpose of this video. So if we're trading these price movements, we only trade when we have an edge. We look at the market cycles, market structure, reversals, movements. We know about accumulation, distribution. Look at the image. We look at the market in a structured way. And again, as you have already seen on my website, keep it simple, folks, and just trade what you see. Don't be distracted by information, by over information which is not relevant. Just try to be objective and look at a certain amount of things. This in combination with volume will really give you, I would say, will really give you the edge. I think many people are looking for. That's not the holy grail. It's absolutely not that, but it will take you a step in the right direction. Now, this is probably the most important slide of the presentation. I've been teaching people to trade now for, I would say, close to 7 years, and this is the challenge. People will trade when there is no trend, or even sometimes against the trend, but most likely when conditions are not favorable. And when you are you can have the best trading system in the world, but if you are trading when market conditions are not there, it's just not going to happen. It's the same like when you're a very good sailor. Well, you can be the best sailor in the world, but if there's no wind, you can forget it. It's just not gonna happen. What people also do sometimes is to follow signals but enter close to support and very important support and resistance levels. This is too much risk. Why? Because these support and resistance levels could at least temporarily, block the move. So it's something to watch. Then third reason, one of the main reasons why this tool was developed is the fear of missing out syndrome, and is just trading too much, trading signals without context. And therefore with this tool we tried to bring or to filter the tool or this idea of good market conditions into the tool. What I also see a lot is entering the trade too late, waiting for the confirmation of the confirmation of the confirmation. Very often due to the use of technical indicators, which, if you really look at it, if you follow the signals of technical indicators, especially when you're trading fast, very often you will be a step too late, sometimes 2 steps. So this is something, it's a bad idea. Gambling, I see less now in the last few years. I think it's a good idea. Gambling with so-called miracle strategies on news and so on is something that I would strongly advise against, especially when there is huge volume in the market at certain, I would say, in a time period of 10 seconds or 15 seconds. It is very dangerous to trade within these times, because what you see on your screen is very often not real. Why? Because there's too much information then coming out when these important news is coming out. So I know it's offered a lot, but I would strongly advise against that. Of course, trading when the news is out or before the news, in anticipation of the news, can be a very good idea. But when the news comes out, I would be out of a position and wait and see what happens. And the craziness is out of the room, then you can start trading again. So let's talk strategies. Now, again, look at this simple image. And again, let's ask ourselves, how many things can a price do? What can the market do? It can trend and correct. It can break out. It can test support and resistances. It can have these impulse or momentum moves, and the trends can reverse. Sooner or later, trends, sometimes very nice, won't last forever, and sooner or later they will reverse. That's it. So all these thousands of strategies which exists around the world, actually, if you really look at them, most of these strategies, maybe all of them, can be put in one of these categories. Now, I created 5, maybe there's 6 or 7, which you can, but at the end of the day, you have to have the overview, the structured view, the simple view first, and say, which movement am I now trading? Where am I in the market? And what am I going to trade? If you like to trade trend corrections and reversals, fine, only do those. If you only want to trade the tests of support and resistance level, only do those. Very few people will trade all these strategies. So again, less is more, and limit yourself to certain, I would say, to certain price moves is important. But this is important. So these are the 5, and we built those in the SuperFive system. Now, let's talk about the anatomy. What are you looking at? You see, I'll give you a little idea here how it looks. One is in white, one is in black, light and dark version. And then you see the SuperFive with all the parameters, very simple. And on the bottom you can see here, it's a normal time chart. It's 5 or a 30-minute chart. And here on the top, there is a range bar. Very simple. So you see, you can change all the colors, and that goes without saying. But you see, it's very visual and good. Now, we've been over this 5 strategies in one single chart. We use these triads for entries and stops, or the market structure high, market structure low points. We are convinced that we will trade in terms of quality, we'll trade better but less. We can trade with alerts, and you can use this on all instruments, timeframes, ranges. Good. Now let's see what the anatomy of this thing is. Basically, there are 3 components: WL trend, WL momentum, and WL SuperFive. In TradingView, you will get all three separately. So if you use a SuperFive system, you will automatically have the momentum and trend which are working and which you will see on the chart if you want. You can also hide them, of course, in TradingView if you want, but you will have these three. But some people will use WL trend because there is some real value in there for their analysis charts and not for their trading charts. So you can also use them separately. They are I'll explain that later in the script only part of the presentation. But there are three components. Now, the WL trend is the cloud you see on the screen, red and green. What it does, it actually shows you what the trend is, but it will show you this in two correlated dimensions. And I will explain this when we'll talk more and when we'll talk about the corrections strategy. But basically what it is many people, when they trade, they look at different time frames. Now, the fact that we sometimes combine time frames which are not correlated or which are too far apart or too close together is another discussion. But basically what this thing does is it will show you the correlation or the trend in two correlated time frames. For example, if you're trading in 1 minute, most people will look at 5 minutes. Now, this will show, this red and green, show you the exponential moving average 20 area. It's not exactly that, but it's close enough. And also the exponential moving average 20 area, but not in the 1 minute which you are trading, but in the 5 minute. So that is, you have it all on one chart. And it's very straightforward. Red is down, green is up. The WL momentum is, as the word says, momentum, is the price momentum or the speed at which the price is changing. Is what you see in blue and magenta. Again, you can change all the colors if you like. Now, it is the, how should I say this, the combination of these two that will trigger the signals in the SuperFive strategy. You can see here on the right side how this works. It's also explained in the next slide. I'll show this to you, but where you can choose 1, 2, 3, 4, 5 different strategies which you would like to trade, see on the chart or get alerts. All right. Most people will do 1 or 2 on the same chart. I would not advise to do more. Now, a little word about this WL trend is, of course, what it will show WL trend is there a trend? Is this trend strong enough? Is this trend getting stronger? Is this trend young or old? There is a huge amount of information in there. It just looks like a cloud, right? But trust me, it's a lot of information derived from there. And of course, we built this into the algorithm to say, all right, we just want to trade then and then. Is it perfect? Absolutely not. But is it good? Is it a serious improvement and a step forward? I would say progress, not perfection, but I could say it's a substantial progress. Okay. Now, I also have, and this is more something for the coaching, you can add to this tool additional filters, additional stuff. I use the exponential moving average 275. There's also a special reason for that. That is something that I'll explain in the coaching sessions. But to even more filter out certain strategies and to make the direction in which you would like to add the signals easier. Okay, I'll show this later when I show you the tool on the platform. Now, that's the visual part. Then, of course, there is these parameters where you say, all right, what do I want to trade now? Do I want to, what do I want? And let's say you had your analysis on the market, or you're using this 275 exponential moving average, and you say, I want to trade long signals only, no shorts. You will then choose long signals and no short signals. You can choose both. Me personally, most of the time, I would say 80-90% of the time, I will set them in one direction, right? So it's not a blind robot or something. No, we just clearly put some thought in it. When the market is like this, it's long. When it's like this, I just put in the short signals, okay? Good, that's one thing. Then you will see that for certain strategies, we like to have the signals or the moves in the beginning. For example, we like young moves, young corrections, or young momentum trades. Not when a trend has corrected 8 or 9 times, we don't want to trade it anymore. So we like to trade the young moves. And so here there is a counter where I can actually say, hey, I just want the first or the second or the third correction. So to give you an idea, in signal wanted, for corrections, I will put in 3. And for momentum, I will put in 1 or 2. This filters out all the trends. Okay, so that's another. If you say, no, I want to be alerted on all corrections, well, the 5, you change it to 99, and then you'll get all the corrections. Okay, so that's one. You have corrections. I will explain this in detail later. You have 4 types of corrections, so there's 4 different possibilities in there. You have the reversals. I'll just go a little bit further. You see here, these are the 5 strategies: corrections, reversals, momentum, support and resistance, tests, breakouts, where you can set the levels. I'll explain that as well. So you just choose the 1 or the 2 you like, hop, and pops your uncle, you're good to go. You can change the style, the visibility, so I must say I was very surprised in the good sense how well this all worked on TradingView, I have to say. Also from a visual point of view, very clear, very, very nice. Now, let's talk about trend corrections. Trend corrections, well, it's a very known strategy, but of course you have to make the distinction between, I would say, the good moves and the bad moves, or what do you look at, or how to make the distinction between corrections you do want to trade and the ones you maybe better shouldn't touch. 2 concepts. One is how young, how old they are. Second is how far is the correction. So I'm just making this as simple as I can. So if this is a move, just drawing this on here like this, and it goes like this, you understand, of course, that if you are able to enter in these first or second corrections, that from a statistical and from a potential point of view, of course, this is a lot better than trying to trade the 6th or the 7th correction. That is one idea. The other concept is, and I'm just making this a little bigger, that is that when a move is like this, and when there is just a small correction like this, is something that I would be careful with. Why? Because very often you will have this, lower and lower and lower before it maybe goes back up again. So we like to trade corrections which have corrected, I would say, 1/3 is the minimum, but the further it corrects, well, the more we like it. Now, this idea, this concept, or both concepts, have been built into the tool. Okay, now I will show you this on an example, which is also, well, always a lot better, a lot easier to understand. So here you see the corrections and the signals, and as you can see here, you see the green cloud, which is the WL trend, and this is the EMA 20 area in the time frame, or like in this case with the range bars which are currently trading. And this is actually the area of the EMA 20, but in one time frame higher, correctly correlated with the time frame or the dimension that you are trading. So basically you are looking at two dimensions, two time frames, two range bar dimensions combined. Now you have several options, and you see the signals here with the blue arrow. You see WL buy is written here. You can activate that, deactivate that. It's all possible to see it or not see it. That is a matter of choice. But you see the little triangle here as well, so you see where the signal is happening. Now here you have 4 different algorithms. Either you say, well, I want to trade corrections on the time frame or dimension which I'm trading, which would be in the EMA 20 area. And you see here there is a triad on there. You see this? When this triad, of course, under certain conditions, falls exactly on that line, an alert is triggered. Okay? This is one option. So I would say right here, number 1. Now this line is a little bit too thick. I'll go a little smaller. If you say, well, no, I don't want to, you know, I just want to trade the corrections which correct more, you could choose the dimension high. You could choose this line. So, and if you would have a triad on here, you say, well, no, I don't want to do this. I want to do this. I want to go one step up, one dimension higher. So that's your second option. If you say, no, I like both. I want to do both. That's the third option. I would say 1 plus 2. That would be the third option, is to do both. Very easy. The parameters in the tool are very easy. You can choose, but you have to choose 1, 2, 3, or you have a fourth option. I will show this here on the right. You see here you will have the WL trend, which is short, and you see the momentum cloud, which is going up here, there, and then moves back down. The color here where the triangle is changes, but this color change happens inside the bands, and that's when it says go, and then you have WL sell, and we call this the momentum correction. That is the fourth option, number 4. So 1 is on the, I would say, fast line, 2 on the slow line or area, 3 is both of these lines combined, 4 is the WL momentum color change within the WL trend. These are the 4 corrections. Okay, now there is a counter, as I said, involved, which could say, well, oh, very important point. When does that counter begin? Well, that counter begins counting when there is a color change in the WL trend. So let's say here before there was a color, let's say there was a red color for the WL trend. From that moment, the counter starts. Once the color changes again, the counter starts again at 0. So here, for example, this would be the first correction, and this would be the second correction, and this would be the third correction. Now, if you would say the counter, if you would set that at 2, you would never see this one. You would only get the first 2. Okay, good. Now I'll just clean this up for you. So these are the corrections. Good. Now let's move on. The reversals. The reversals, I have to say, this is a strategy which I think many people who did not trade this strategy before and bought the SuperFive system start using this strategy. Is one of the most popular strategies within the SuperFive system because it works well. And you will see, just put in a few images and explanations again for people who are not familiar with reversals. But I'll explain to you again on the tool how it works, how these alerts, how it is set. Now, here it's very simple. We can look at the balance between buyers and sellers, meaning is one side really stronger than the other side. And how do we see this? We see this in the size of the WL trend. Let's say the WL trend is very small on the red side, but was very large on the green side. That means that very clearly the buyers were stronger. Vice versa, if red was a lot smaller, thinner than the red side, it's of course the sellers who are much stronger. Now, when we see this, and it's very difficult to show this on the screen, but let's say before here, we'll show this on this. Let's say before there used to be a very wide red area here. And then you have this green area here, which is considerably smaller than this. Then we trade the reversals. So we just not only trade the blind signals, we look at the balance in the market. And let's say, for example, you would have a market where, well, these clouds, the long side or the short side from the whale trend would be equally strong. We wouldn't touch it. We wouldn't trade it, but that would tell us market conditions are not favorable to trade now. Now what will happen is, and you see the signal here, once there is a full candle falling below this, the center, the EMA 20 from the upper dimension, which is broken, the next candle will trigger a signal. It's something that people love to do. You will develop a taste for it, very likely, because it's something that is that works well. That really works well. Third strategy is the momentum move. The momentum strategy I developed many years ago out of pure frustration. Why? Because I can't remember how many times I was sitting in front of my charts, trading on a 5-minute chart, where I saw the market move very strongly, and I said, "Whoa! Look at what's happening now!" But I saw a huge candle, and I was too late to get in, and I didn't want to get in there because why? Because then I had to put my stop very far away, and so I missed a lot of moves. I missed a lot of trading opportunities. So I developed this. Now this will work on any chart, but this will work substantially better on range bars, on movement bars. Why is this? Very simple. Let's just take an example. Let's say you would do this on, I will draw it here on the left. Let's say you would do this on a 5-minute chart. This chart would just take off. Just take off. You say, well, okay, if I want to get in there, that's already a big move. I have to put my stop there. I don't know. I probably, very likely, wouldn't do it. But when you have a move like this, the same move, but you will have this in range bars, it would show something like this. It would say 1, 2, 3. It will go very fast, right? All the same size. I'm not drawing this perfectly, but you get the idea. And what happens at a certain time is it will stall. I'll just draw it a little higher. I like to take them a little earlier, but just for the idea, otherwise I get in my image here. Let's say it will just stall a little bit. It will just hesitate. For one, maybe only 2 bars, it will create a triad, as we discussed earlier, and that, of course, is my entry. And then my stop is below the triad. So, of course, here, my risk is substantially smaller and is manageable. Okay. Now also here again we use this with a counter. Okay. We do exactly the same. Just clean this up for you. We use a counter, and I'll explain this visually. It's always better. You see, this is an algorithm which is created on the WL momentum cloud, which is the magenta and blue. You could change how you want this, but I always use magenta and light blue. And when this cloud is in a certain position combined to the WL trend, when these market conditions are good, then it will trigger these signals. So when I get these triads on this blue or magenta cloud, it will trigger signals. Again, here I will use the counter. I just want to use the ones which are young, which are fresh. So I use the first maximum, the second. So that is the third strategy. This is the fourth move, support and resistance. Now, support and resistance trading is very popular, and for good reason, because it's a very good strategy. The only thing I am a little bit, uncomfortable with is that the way it's traded, because people will set a support level, for example, and they say, well, it's going to bounce there. It will bounce there, and just like saying, all right, I'll buy there at this level, and then I'll accept a certain amount of risk and put my stop lower and hope it will happen. And it often does. I mean, I'm not disputing that, but I would like, before I get in, to have a little confirmation. And this is the way the tool is set up. Put in a few images again for people who maybe are not very familiar with this, but most people know the principle of support and resistance trading. But the idea is actually, when and how do I get in? Because it's a little bit like putting you in front of a car or a truck and say, all right, it will stop just here. It will stop here. Well, I hope it will stop. If it doesn't stop, you get run over, right? I'm more than happy to trade this, but I want a little confirmation. And the way we do this is in the TradingView platform, and of course with the SuperFive tool, we set in an area, a support, or when it's to the downside, resistance area. As you can see here, in this area, we need a few things to happen first before we get in. That means we are a little bit more strict. We need a little bit more convincing. We need a little bit more quality before we get in. And again, it's parameters in a certain way. When you have color changes of the WL momentum cloud in relation to the trend, which has to be in a certain way, then you get an alert. Then you say, all right, for us now, we think the support signal is confirmed, and then we get in. Okay? So it's not the principle of these ideas is very clear. But again, and this is where many traders are struggling, is to make a very precise distinction of, all right, which are the moves which really now, or the signals that are really strong enough to get in, and when should I avoid getting in. Then, last but not least, the breakouts or breakdowns, if you like, on the short side. This, of course, is very popular, but few people make money trading this strategy. Why? Because I don't think I'm exaggerating, but you could say that 75% minimum of the breakouts fail. Why? Because they just fish the orders, and then they shake the tree, and people are stopped out. So a lot of breakouts are false. And therefore the question is again, how do I trade this? Many people see these things and they say, well, it's very likely that's going to break out to the upside. But then they try 2 times, maybe 3 times, they lose. They close the platform, And then they look the next day or a few hours later and they see that the market exactly went there where they thought it would be. But maybe there was a better way of trading it. Now, the way we do this and the way the tool was created is that, for example, if you have this resistance level here from the breakout area, and you can have accumulation before, which I would prefer, but let's say you have a breakout, you will have a new high, which is on number 2, setting a top, meaning there is a new high. Very often the market will go down again. It will either test the old resistance level, as is shown in point number 3, or it can even fall lower, back again into the breakout level. It can break out half an hour later, 3 hours later. It can break out right away. We don't know. But what we do is, when that new top, that new high, which is explained under point number 2, is broken again, then we get in. That is the confirmation that the breakout level is behind us. And the way this tool was created is exactly in the same way. We set in a level, and when something important enough happens in that area, we get an alert. So therefore, reducing the number of false breakouts considerably. Okay, again, always in the idea I want to trade under the best conditions only. Now, here some of the favorite moves I trade, and this will also explain in the second phase, because the first people get this tool, they will start playing around with it, and they say, all right, this is interesting signals and this and that, and they will see the value. But what they will not see right away is that you can combine different strategies in the same move. What do I explain with that? Look on the left top. There is a reversal here, actually. You see here, there is a reversal here to the upside there. And this actually is the first momentum move. This is a triad. So basically here, the reversal to the upside was just, you could have traded it right away, but you could also say, hey, if I get a reversal, I will trade the triad momentum, for which you will get a signal if you want, or the first correction. Again, a Dutch word, don't mind. So this is how you can do this. So you can use certain strategies or certain alerts to prepare for the next move or to prepare for the next entry. This is how many people use this, because you can actually run this thing, and I'll explain this in the next slide. Hold on, I just have to clean this up, right, like this. And you have to understand, there's many ways you can use this. Some people will say, well, I just trade the Nasdaq, or I just want to trade Tesla, or I just want to trade oil, and have a specific idea. I can do that. Now, you can use the tool to help you and recognize the good signals. That is one way. But what you can also do is, of course, use 2, 4, 8, 20 instruments on the time frames or ranges you like, set the alerts, and let the signals come to you. This will also avoid, if you have 10 instruments, there might be at that moment, 7 or 8 instruments at that time which are not doing anything, or nothing important enough to trade, but there might be 1 or 2 which are worth it, and then they will show the signals that you have chosen. This is how you use it. Yeah, I have many people doing this in the forex market, many people doing even on daily charts, and they have lots of alerts running. And I must say, with this alert function in TradingView, it's very practical, because when something happens, you see it. You get an instant message on your phone. It's very practical. Now, I will show this in the platform, but when I show this in the platform, it's often quite small. Therefore, I I will, explain it on the PowerPoint presentation, which is easier. Now, what you do is very simple. You click on, you choose the strategy you want. Here in the SuperFive, you go in the SuperFive, you say, all right, what you want, and then I'll just, hold on, I think I even made some circles. Yeah, all right. So long signal, short signal, both. You say, well, here the alert frequency, it should be once per bar. You just leave it like it is, whether you want the text or not. And then again, how many signals do you want? We talked about this. And then of course you choose the strategy or the strategies. Here, for example, correction. And then once you've created the signal on the SuperFive tool, you will go to alerts. And then you say, well, I created this signal on SuperFive, which, for example, is a correction long or reversal long. You just put in the condition. You can do any alert. You can leave it like it is. Then you can use an expiration date. You can give this alert a name for the message, because you can have several messages. You can play with 4, 5, 6, 10 alerts. So you have to give it a good name. So when you get in the signal, you know which alert was given, and that's how it works. You get the alert name, and then of course notifications. Depends on how you trade. I have one running now for close to I think 4 weeks. I must say I'm actually surprised by the efficiency of it. So you can have a notification on the app. You can have a pop-up if you're in front of your screen. You can have an email, or you can. What I use is the SMS, which wonderfully you see it on your phone. Say, hey, there's something maybe worth looking at. You just click on the alert. The platform opens on your phone. I must say, very easy to use. Now I'll explain. I will go on immediately. Just before I'll show this at least on the tool. It's a script, an invite-only script. So how does it work? Once you bought the tool, you'll get a link from me, which will bring you immediately to the tool. The 3 tools. You have the real momentum, the real trend, and of course the SuperFive. What I will need from you is your TradingView ID, and I will of course unlock or activate the 3 tools. You can use them separately, you can use them together, and very easy. You can immediately use them on any chart you like without any restriction. It is a very simple, as is for all invite-only scripts on TradingView. Very easy to use, very easy to do. Now, before, of course, we have to show this on the screen. And you see there's an alert here. I had an alert here because I choose the pop-up. I'll take this away. Now, what I have on here now is the S&P 500. And you see here I'll explain this a little bit during the coaching sessions once you should decide to use the tool. I can just share with you what I have on there. It's just previous day high low, pivot levels I have on there, and if on the future market I use a volume profile, and on the CFD forex market I use the market profile. Very simple to understand where I am, orientation, and so on. Now normally people will use 2 possibilities. Either you use 2 different instruments, or you could say, well, I would like to use a time frame and a range. Many people do this. I will also explain in the coaching how you combine these, what are good combinations and what aren't. And then it's very simple. Here you have the tool here. Now you see the blue line. That is what I use as a filter. I will just use short signals under the line and just use long signals. So if, like what's happening now here on the right side, I will just switch now. We'll go here into the SuperFive settings, and I say, well, I don't want the longs anymore. I just want the shorts. I don't want to, that was before. Now I don't want the shorts because I'm above the line. I just want the long signals. All right. I say, okay. So now, of course, it shows me the long signals under the line, but I would never consider those. But I'm interested in these signals. And you can immediately see this is a reversal to the upside, right? And this is a triad. First triad after the it's the second. No, yes, after the reversal is the first triad. So if I could use an alert, but even visually I could trade it and I could enter the market right there. That would be if it goes further down in the green cloud, then of course it would become a correction. Yeah, so you will learn to look at these movements in a very, very structured way. You can also change in these other tools. You can hide them, you can show them settings, you can change the color, you can do whatever you like with it. And so people develop their personal I would say view with this. But you see here, for example, yeah, I'll see if there's an example. Here there was a breakout to the upside. It was mostly the market was short. Here, hold on. Yeah, I would put it in here so you can see these things. I will put in the short signals, right? And then here, for example, reversals. I will take these out. I said I want corrections. You see here when I click on corrections, I hope it's not too small, but you see the 4 possibilities. The fast dimension, the slow dimension, the fast and slow dimension, right? In the momentum, okay? Now if I say fast and slow, and I click OK, you see these short signals which are given, very nice actually, short signals which are given to the downside, yeah? So again, it's something that will allow you to focus on certain things and to focus on quality of signals. So very straightforward, very easy to do. It's something that I will take you through during the coaching sessions which we do together on the tool. So don't hesitate to contact me for that. Now, of course, when you buy this product, you get my PowerPoint sheets, PDF. You get, and it's quite, I think, extensive. It even includes part of my course already. YouTube channel. There are some videos in English already on my YouTube channel, and there will be substantially more going forward because there's more and more people, I would say, discovering this. I must say, the last years I only did this in German, French and Dutch, never in English. So here it is. And so if there's anything interesting you can find on there, or you have any questions, feel free to contact me. Now, a few things, to terminate this video is try to have this analysis and to look at the tool and say, all right, is this strong enough to trade? And again, I will give you a few tricks for that. I would use 1, 2 strategies, 3 maximum. Money management, you can use whatever money management you want with this tool, but again, trade below the emotional pain threshold. Many people are also helped with scaling out in order to be disciplined. Now this is more something for the trading courses, and of course don't play or gamble. It's not worth it. Now, so what's the idea? We only trade when we see an edge, when we see an advantage, when market conditions, when we can recognize that market conditions are good. We use trend definitions, but this WL trend tool, which is actually 2 dimensions in one, and in a very clear structured way shows you when market conditions are good. So we use that. Now we learn about statistics, meaning that in this system, limiting yourself to certain things, you will get to a point where you know what percentage of trades you win, what percentage you lose, if you apply this money management on that management, on average, on a trade, on losing trades, how much it is, on winning trades, how much it is, and you get a business model. This is what I do with all my students. I try to make it real, not general, to say, well, I had a good week or a bad week. No, to know, okay, what is my expected value? What is my percentage of winners? What should it? Is it good enough for what I do? Because I have all these numbers. So this is what we are trying to do. Some people have an advantage starting with a very small trading account, trading for real money, and I have nothing against that, because some people have difficulties trading with demo accounts. I can understand that. But again, limit the risk in the beginning. Build up the confidence and the experience. It really will take a few weeks, months before you really see the full potential of this tool. And then once you get the hang of it and you know exactly what you want to do with this and you build on confidence, you move to live accounts or higher amounts. Otherwise, keep it simple. Just trade what you see. Again, thank you very much to all the traders who have been so supportive of me for the last years. It's such a pleasure to meet all these people around the world now who are trading. And so, yes, thank you. I'm very grateful for all this attention. I never imagined this would happen. Again, if you want to contact me, here are my contact details, and thanks again, and I hope to talk to you soon. Bye bye.